All right, in this lesson, we're going to teach you what debits and credits are. So this is an important one because a lot of times preconceived notions of what debits and credits is usually what makes a student get it wrong in the long run when it comes to debits and credits. And no fault of their own. It's just because you learned it one way, maybe through banking or maybe through just the finance industry, that when you think of debits and credits, you have this notion of what they mean, but accountants use it in a totally different way. And that's what I'm going to teach you in this lesson. So let's get started here. Debits and credits are the most important aspect of doing accounting. As accountants, we need to know how to debit as well as how to credit, as it is literally the language of accounting and how accountants speak. So oftentimes, accountants speak in debits and credits, and it's our job as accountants to understand what the debits and credits mean. It also helps us to journalize the entry into the books of the business. In order to do that, we need to know, are we debiting or crediting an account? And that's what we're talking about here in this section. Now, you might have preconceived notions of what that means, but unless you know the accounting definition, you should kind of throw away those notions out the door when you're talking about accounting. So if I asked you, what does debit mean? One of the things that you might think of it is a debit card, right? Another thing that you can think about when it comes to debit meaning taking money out of your account. So that would mean decrease when you hear debit. When you hear credit, you might think of a credit card. You might think of paying by credit. You might be thinking of crediting your account. And when you credit your account goes up. And those notions are what students get mixed up when they're thinking about the debits and credits. So that's not necessarily what it means from an accounting standpoint, but that's the preconceived notion that a lot of people think about when it comes to debits and credits. Now, as an accountant, when we look at debits simply mean left, okay? So from an accounting standpoint, debits only means left, okay? Which also means credit means in accounting right. And that is all it means. And those are directional points of interest. So technically speaking, if you were going out with friends and you knew how to get to a fast food joint, you could give them directions in debits and credits, right? So you could say, get on the next street and at the light, take a debit. Once you get 3 lights past that, then make a credit, then make it an immediate debit. And then finally, you'll see the fast food joint on your credit side. And I know that sounds like a joke, but that's basically what debits and credits means. Debit means left, credit means right. Right means what? Credit. Left means debit. So debit means left, credit means right. That's all that it means from a definition standpoint. So now that you have a better idea what a debit and credit are, let's talk about where it comes from. So debits, technically the idea of debits and credits, meaning left and right, has to do with something called a T account. A T account is an old school way of accounting for all of the accounts. So if you remember in the last section and a little bit in the transaction analysis that we did, we said that we want to account for each one of these accounts. So we want to actually summarize what's left in these accounts or what's in these accounts at the end of the period after we do all of these transactions. And we saw that in that like Excel chart in one of the last videos. Well, this is a T account and this summarizes each account. So theoretically, every account would have a T. So this could be the cash T account. Now, what does debit and credit means? Well, debit means left of the T, whereas credit means right of the T. So that's where we get debits and credits. So if I said to debit this account, that means put the number on the left side of the account. If I said credit the account, then what I'm saying here is to put it on the right side of the account. And so that's how we account for all of these accounts. Okay, so that's where debits and credits come from. T accounts are an old school technique to account for each account. This is the old school method. We don't necessarily do it this way anymore, although I'm going to show you how we do this. But that's kind of what we do with debits and credits, where they come from, and then the T. You're going to need to know what the T is because you'll see that later on. So if we say debit this account, we mean put it on the left side of the T. If we say credit this account, put it on the right side of the T. Now, these T accounts are buckets which account for inflows and outflows within the account. It keeps track of the individual account and how much is charged to it and how much is removed from it using the debit and credit system. General ledger is a collection of storage area accounts used to keep track of increases and decreases in financial position elements. And I'm going to show you that in a few minutes here. And then the problem with the T accounts is that they take up way too much space when you account for all of your accounts in which a company might use. So think about it here. We've got one T account here. We might need 200 accounts because we have 200 different accounts in our general ledger system and our accounting system. And so we would basically have to have 200 of these T's, and think about how much space that would take. That's not necessarily the best way to conserve all of our energy. And so we don't necessarily use T's anymore just because they take up so much space, and we need something that's a little bit more consolidated and easier to work with, especially on the computer. So debits and credits, instead of using T's per se, we use a series of ledgers and journals. So debits and credits allow us to use journals and ledgers to summarize the company's financial events that have an impact on a company's accounting equation. So what are journals and what are ledgers? Well, journals, this is where the transaction is first entered in to the company's books. So when we take the data and we analyze it, and it's time to actually put it into the accounting system, we take that data and we make a general journal entry, a transaction entry into the books, into the journal first. So if we were to look at the journal, that would be the original entry for that transaction. Now, we can have subsidiary journals as well. So subsidiary journals basically means that instead of putting all the transactions in these journals and cluttering them up, we might have one general journal where kind of everything is housed, but then we have multiple subsidiary journals in which maybe we only do journal entries related to sales in the sales subsidiary journal. Then at the end of the period, end of the month, or at the end of the day, we make one entry from that subsidiary into the general journal, so we keep the general journal clean. So if you hear subsidiary, that just means that we've broken it out so that we can have all of these transactions that are similar in nature in that subsidiary journal, and then we'll make one entry that goes from that subsidiary back to the general journal. Now, along with the journals, once we have the journal, now the journal is all mixed up, right? So every transaction goes in the general journal. The problem is if you look at a general journal, and you'll see one later on, it's hard to figure out what the amounts are that's left in an account. So if you look at a general journal, it won't tell you how much cash you have. It won't tell you how much inventory you have. It won't tell you how much you incurred in payroll expenses. It's just a listing of all the transactions. So the next step that we can go further with this journal entry is we can look at ledgers. So what we do is we post the transactions from the general journal to the subsidiary ledgers, or the ledgers. Okay, so we post them to the ledgers, and there is a ledger for each account. This is how we know what the balance is for each account. So this is a summarization of each account's ins and outs. So it's kind of like a T at the end of the day, except we don't use a T because of the space consideration. We use kind of almost like a general journal ledger that I'll show you in a minute, or in another video, it kind of looks like that. So we have ledgers. So that is a quick review of, or not review, but a quick introduction of debits and credits. Now, I know you don't know how to use them, and we've got another video here that's coming up next that will show you how debits and credits actually work with the accounting equation. Again, getting you one step closer to actually making journal entries. And remember, the journal entries is how we, as accountants, take that data and put it into the accounting system. We do it by journal entry. Well, you don't know how to do a journal entry yet, but you know how to figure out what a transaction is, what is being affected in the accounting equation by that transaction. And now you know that debits mean left, credit means right, right means credit, left means debit. That's all that matters when we talk about debits and credits. So I hope you enjoyed this lesson, and we'll see you in the next video. Hey guys, it is Patrick. Don't forget to press the like button and share this video with someone who could get a lot of use from watching this lesson, like maybe a classmate or maybe a friend or maybe just a parent, just because you wanted to share this video because you're very excited about what you saw. Share it with someone. And if you want to help us grow and help us make sure that we put the very best in accounting topics out on YouTube, make sure you press the subscribe button and turn on that notification bell. That way you're alerted every time we post videos to this channel. Now, I do this with every one of my classes at the end of class. What did you learn from this lesson? Put that in the comment section below, and I'll respond to you on what you got out of this video. So hope you enjoyed this video, and we will see you in the next lesson.